Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
Mortgage brokers are like bartenders. You leave with something you didn't need in a long tab. Welcome, everybody, to the Friday edition of Wealth Coffee Chat. I'm back this week. Great to have everybody join me this morning. Welcome, Cherie. So, interest rates. Lots and lots of talk around interest rates over the last couple of weeks. This week, some numbers came in. Monthly inflation has actually gone up to 3.5%, and quarterly inflation is now at 3.2%. It is outside of the RBA's range of what they would like monthly inflation to be, which is between 2 to 3%. But some other figures that have come in is also employment has actually increased. What that increased to 4.5%. The RBA are in a pickle because they don't want either of these numbers to go up. But if they don't drop rates, inflation will continue. But if they keep it, the employment, it will have an effect on the employment. So earlier on, we weren't expecting a rate cut, but with these figures, it looks like we may need one. But how that is actually going to affect both of these numbers, we're going to find out next Tuesday when the RBA meets. So it'll be an interesting Melbourne Cup rate meeting and rate decision. This week, Justin, thanks for joining. Now, this week, we've had some news in regards to one of our lenders, Macquarie Bank, have just advised that, or have just announced that they're actually no longer accepting loans under a trust or a company. For those who don't know, you can borrow under your personal name, you can borrow under your trust, and you can borrow under company. Now, there are certain rules and certain benefits in terms of why you would borrow under each of these structures. But Macquarie are now saying that they won't accept any trust or company borrowers. Now, whether this is going to be a change within the industry, we don't know. But it's interesting that Macquarie were quite good at being able to understand trust in companies and complex structures, and being able to look at clients so that they can actually borrow under those entities. So for them to advise us that they're actually no longer accepting that, whether it's temporary or whether this is a permanent solution, we still actually don't know. So this is an ongoing conversation. I wanted to share this here because it has been a strategy that we talk to with our clients. Now, Macquarie will continue using income from these entities to help show servicing. But the reason why they're saying that, the reason why they're giving brokers an update in regards to not accepting these trust and company loans borrowers anymore is that they are having an increase in their volumes. Now, they've got one of the best SLAs in the industry. My team have been able to get deals approved within 4 hours. I believe that the record for Macquarie is to get a loan approved within 20 minutes of submission. So the service is great, and they want to be able to keep that. And with companies and trusts, there are a lot of more boxes to tick. Now, there is an upcoming anti-money laundering regulation, which will require additional verifications for both trust and companies. So that's going to draw out the process. I do hope that it's because Macquarie want to keep their SLAs very low, and they prided themselves on that. So if they're walking away from these trust and company loans, then they will be able to keep their SLAs. Maybe the amount of business that they're getting through these type of borrowers is the sacrifice they're going to make so that they can continue to deliver their SLAs to the clients. The other thing that they cited when they're sharing this was that there is an emergence of strategies on social media that are aimed at maximizing lending through trust in companies. Now, there are probably several reasons why you'd use a trust or a company. I'm talking to a financial plan of one of our clients at the moment, and we're discussing whether the clients are going to purchase their investment property under their individual name or under another entity like a company or trust. One of the reasons why you would be able to would purchase under a company or a trust is that there is asset protection within that. Now, my client is the director of a company. He's got a lot of personal guarantees. So we may want to look at using these entities so that if anything happens in the business, the assets that he's acquired outside of the business isn't going to be in jeopardy. So, trust and companies will provide asset protection. Additional to that, and I've spoken about this in the past, lenders, we have some lenders, Macquarie were actually one of them, who enabled us to not include both the rental and the loan for servicing, as long as that trust or that company is trading profitably. So it's not making a loss. So what that means is that for some clients, if they've maximized or if they've almost reached their maximum borrowing capacity, they could look at borrowing within a trust, have that trust get to the point, it may take a few years, but get to the point where it breaks even. So it's no longer making a loss. And if the accountants are able to write a letter we can provide that to the bank, then the debt within the trust no longer has to be declared under the personal name. Now, as long as you purchase, the next property purchase isn't in that same trust. So it may result in having multiple trusts as you continue building out your property portfolio. So, those are the two reasons that we often talk to our clients about in regards to why you would potentially look at borrowing under a trust or a company, and how they could help build out your property portfolio. So with that in mind, myself and my team are always going to stay on top of these, and we're always going to look at solutions like changes in the government rules, changes in tax laws. They're all going to happen, and they're going to continue happening, and they're going to go through ebbs and flows. I mean, we went through a stage where we had to go through your living expenses with a fine-tooth comb. We no longer actually have to do that. So I hope that this is just a Macquarie thing, but if it isn't, and it becomes a bigger thing in regards to lenders not looking at lending to trusting companies, what I do know in my experience is that we're always going to have a lender that will, and there's always going to be a solution there. So don't feel like if your next step was to purchase under a company or trust, that this may derail your financial strategy. It won't, because we're always going to find a solution, or there's always going to be another solution that arises out of these changes. So keep an eye out on it. I'll keep you updated, but I wanted to share that with everybody this week. Have a wonderful Friday. Have an amazing weekend, and I'll catch you guys all in a couple of weeks. Bye, guys.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.